Now, listen attentively. The reason why you are blowing up several accounts or why you are not able to keep your profits is because of what I'm about to teach you now. Hello, everyone. This is Ageless. So, if you've not subscribed to this YouTube channel, ensure you do that so that you won't miss any of my video. So, whenever I released it, okay. So, this is what the part two of the Seek and Destroy, the part two of the Seek and Destroy. If you've not watched the part one, I've released it, so just scroll back to watch it. Now let's go into it. So we'll be taking on gold, SAUUSD. Now this is gold on what? On weekly time frame. Can you see that? This is gold on weekly time frame. So why am I picking up weekly time frame? It is because I've actually checked the monthly time frame, which is the highest time frame, and the fair value gap I found on the monthly time frame is actually a breakaway gap, which simply means that price is turn ready to what? To retrace back into it anytime soon. So the next fair value gap that we can trade off of is what? Is on the weekly time frame. So that's why we are picking on what? On this weekly time frame. I want you to what? Pay attention to this, because after this video, after this, you will gain a whole lot of things that will help you or that will enhance your what? Your trading career. All right. So now let us map out our fair value gap. Now, can you see? So this fair value gap has been mapped out. So you might be wondering why this fair value gap when we have what? Several fair value gaps on this leg. Because as you can see, this is weekly time frame. We have this fair value gap. We have this fair value gap here, and we also have this fair value gap here, right? Now the thing is that price wants to what? Move to this high. Price wants to go and what? Take liquidity. Price want to go and seek liquidity. Price want to go and pick out money. Now, for price to get to this very point, it needs a leg. You understand? A close by leg to move to what? To this point. Okay, it's just like when a car needs a gas, right? And we have several gas stations. Now, the car will definitely go to the nearest gas station to get it so that it can be filled before it continues what? Its journey. So the car wouldn't want to come down to this gas station that is far away from home. Okay, it will go to what? To the nearest gas station. I believe you understand that. That is why I always preach it, that you need to understand the language of the market. You need to understand the language of price. Notwithstanding, this is weekly fair value gap. Can you see? This is weekly fair value gap. So we will be trading off of this weekly fair value gap. So what are we looking at? So we are expecting that what? Price will push down into this weekly fair value gap. So when price push into this weekly fair value gap, so then price will now what? The weekly fair value gap will now push it away to take out this high, or probably to continue higher, because for some time now gold has been bullish. So I want to teach you seek and destroy. What happens during seek and destroy, and the reason why most traders lose a lot of money in the market, or probably they are not able to keep their profit. Now let's go into it. This is our intention. Can you see it? This is actually our intention. We want price to what? To come into this fair value gap, because fair value gap is a magnet. It magnetizes price toward itself, and when price comes into it, fair value gap is also a rocket. It pushes price away. So now this is our boundary, or probably you can call it contest, because on this weekly time frame, it is expected that this weekly fair value gap, it should be able to push price to take out this high, because this is the high of this fair value gap. So whenever you have a fair value gap and it has a high or probably a low, so the expectation of that fair value gap is to push price to what? To take out the high or probably the low if it is a what? A bearish fair value gap. But in this case, it is a bullish fair value gap. So we are expecting price to come into it, and after price has come into it, then we can now what? Ride the market upward to take out this high. Okay, now let's continue. Let's continue on that. Now this is our expectation. Now from this now, it is expected that price will take out this high and it will might probably continue higher. That means it's called what? Liquidity sweep. I mean liquidity run. So it will run this high and continue higher. So that is our expectation. So now let's look at it from this direction. Now, can you see that? Can you now see that price has actually retraced into the fair value gap? Now, this black candle came on a full body into the fair value gap, but no, fair value gap acts as a what? As a rocket. So the moment price comes into it, it rejected what? Rejected the price. That's why we now have this wick on this candle. Okay, can you see that? So this is where we will now start looking forward for your entry. How do you enter? So this is weekly time frame, right? You go to what? Your 4 hour or probably your 1 hour for your entry. On your 1 hour time frame, you will look out for what? A bullish 1 hour fair value gap out of what? Out of this weekly fair value gap. So that is where you should be what? Taking your trades. So you get it. Now let's see now. Can you see price is about to move? Can you see? Price came in on this black candle, it got rejected, then it now formed what? This white candle, which shows signs that price is about to what? Move to our destination. And don't forget, this is weekly time frame. Now the distance from here to here alone is a whole lot of pips. It could be 2,000, 3,000 pips because it is weekly time frame. So if you take this to what? To the lower time frame, you see how far it is from here to here. Okay, so now price is about to what? Take off. So now I believe that price is about to take off. Let's switch down to what? To the daily time frame. Now if you look at it on the daily time frame, now before we switch to the daily time frame, I want to establish something here. Now can you see on this weekly time frame, as price is about to take off, to take out this liquidity, do we have any obstacle on the way? No, there is no fair value gap, there is no bearish fair value gap that will what? That will hinder the movement of price on this weekly time frame. That is why you will now check the lower time frame to see if there is going to be obstruction on the way. Okay, now let's switch to what? Daily. When you now switch to daily time frame, and don't forget this is the weekly fair value gap. Can you see this is the weekly fair value gap, right? Now, this is when price was coming into that weekly fair value gap. This is when price is about to what? Take off from the what? Weekly fair value gap. So this weekly fair value gap is pushing price away to take out this high. But look at this closely. Do we have an obstacle on the way? Yes, this is it. Look at it. There is a what? There is a bearish daily fair value gap here. So when price gets to it, it will reject price. Okay, it will reject price, but notwithstanding, the weekly fair value gap should be able to what? Override it. Now let us map it out so that you can properly understand it. Can you see it? So we have it there, right? Now look at it. So this is a bearish daily fair value gap that when price comes into it is definitely going to what? Reject price. So this is the hindrance on the way, this is the obstacles on the way. So as this weekly fair value gap is pushing price up, you understand? So when it gets to this place, there's going to be power tussle, there's going to be what? Obstruction on its way. Okay, so now let's see what we are projecting. Now, as you all know that fair value gap is a magnet. So definitely this daily fair value gap is also a magnet. Okay, it is a magnet. Can you see? So its function is to what? Magnetizes price towards itself. And when price comes into it, it will reject price. Now, this weekly fair value gap aim is to target this high. Can you see? That is the target here. And this bearish daily fair value gap, its aim is to what? Push price lower to what? To target this low. Now, out of these two fair value gap, which one now has more power? Of course, it is the what? Weekly fair value gap, because it is on the higher time frame and is stronger than the daily time frame. So I have actually explained this in the first part. So now this weekly fair value gap has a higher strength. You understand? It is stronger. So it is likely that what? It will push price. It will override this daily fair value gap. But does it now mean that it will just do it easily? No, it will not do it easily, because every fair value gap has their own energy. Okay, this daily fair value gap has its own energy. The moment price taps into it, it has its own energy. It will push price away until its energy is exhausted. Then the weekly fair value gap will now continue to what? To push price up. Okay, so that is the analysis. Now let's take a look at what is going to happen. So now that you know that, okay, you can profit from this, the moment price enters into this weekly fair value gap. Okay, you go down to your what, to your 4 hour time frame, or probably your 1 hour time frame for your entry. As soon as you are able to find an entry, so you place your entry, you place your stop loss below the swing low, then you target 1:2. 1:2 is more than enough to make you profitable. It's more than enough to make you rich. Okay, and funny enough, your 1:2 is somewhere around there. And funny enough, you shouldn't what? You shouldn't target the high of this what? Of this day of this fair value gap, because when price comes into this fair value gap, it is expected that what? It will reject price. Okay. So and before price gets into this place, you would have taken your what? Your profit. Now, because when price comes into this place, there's going to be rangy. Price will range for some time, and you wouldn't want to be in the market for maybe for some days. No. So you take your profit while you wait to see what will happen, while you wait to see that this weekly fair value gap has what? Has taken out this daily fair value gap. Then before you now come back to get involved again. So let's just continue, or probably let's see it in this trade. Let's see how this trade eventually played out. Can you imagine? So eventually it went up. This weekly fair value gap pushed price up, and it hit our take profit. So after hitting our take profit, can you see it even pushed through into what? This daily fair value gap. But you know, as a fair value gap, it has to reject price. That's why we have this black wick. Okay, it has to reject price. Now, listen, look at it. As this weekly fair value gap was pushing price upward, it now created a new leg on the daily time frame. It created a new daily fair value gap. Okay, so this is another energy it will use to what? To push price upward. But notwithstanding, this daily fair bearish fair value gap has to do its own work too. It has to push price down first. So as it's coming to push price down, it will encounter this daily bullish fair value gap on its way. Now let's take a look at it. So look at it on, okay, that trade that we just took now. If you switch it back to 1 hour time frame, you will see it. Look at it. Can you see it? This is where we entered. This is the swing low. I mean, this is the swing low, yes, which is your what? Stop loss. Can you see your TP? So price went. Look at that weekly fair value gap here. So look at how price went, and it eventually hit your TP. And after hitting TP, it still moved upward. Okay, now let's swing back to the daily time frame so that we can continue our analysis. Now let's take a look at it now. Now that price has entered this obstacle, which is the opposing fair value gap, the daily bearish fair value gap. So it is expected that this daily fair value gap will now push price away, because it has its own target. It wants to come and target this low. But as it is coming down, it will eventually encounter this bullish fair value gap that this weekly fair value gap created along the way. Okay, now let's take a look at it. Now, can you see? Let's map it out. Now, look at it. This bullish fair value gap, daily fair value gap, has been mapped out. So this daily fair value gap here will push price into this bullish daily fair value gap. Then this daily bullish fair value gap will now push price out, and will now take out this particular one, and probably to our what? To the swing point. Okay, can you see that? So now let's continue and see what eventually happens. So this is what we are actually looking at, that price will eventually do. So price will come in now. Then after price comes into this daily bullish fair value gap, this daily bullish fair value gap will now what? Push price away in order to what? Achieve our aim of what? Of this weekly fair value gap, because this weekly fair value gap is target is to what? Is to take out this high. Okay, I believe you understand that. So now, as this weekly fair value gap has been pushing price upward, but it eventually encounters some obstacles, some obstruction, which is this one. And as this one pushed price lower, this one eventually encounter another obstruction. So this one now is going to push price upward. So now let's take a look at, now price has eventually what entered this daily bullish fair value gap. Can you see? Now this is when price will now what, this fair value gap will now push price away. So this is where you will now um, go to the lower time frame for your entry. Now if you want to what, profit from this trade, now you go to the lower time frame. Since this is daily fair value gap, look at it, daily fair value gap. Either you go to your 1 hour or your 15 minutes for your what, entry. So when you get to 15 minutes, you look out for what, a 15-minute bullish fair value gap. Then from there you place your trade. So now let's take a look at what happened. So price has entered, right? Now that price has entered, now price is about to move. So price has entered into the what, daily bullish fair value gap. Look at it, price is now about to move. Look at this white candle. So now that price is about to move, and then you would have placed your what, your trade. So you have placed your trade. Now listing, let me go back again. Now listing, so when price was coming down into this fair value gap, e now created another bearish fair value gap along the way. Can you see? E created another bearish fair value gap along the way. So which simply means that this daily bullish fair value gap, as is going to push price upward, it will also encounter this obstacle, this bearish daily fair value gap. Can you see that? So now let's take a look at it. Look at it, see? So this is what is called seek and destroy, because there is what is called rangy price action, or it could be choppy or something when price is not getting anywhere, okay, because price is bouncing from fair value gap to a fair value gap, from fair value gap to fair value gap. It's not trending, okay. So whenever you are taking trade, you need to be very careful, you understand. So as an ICT trader, you should know when price is going into seek and destroy. This is where most traders lose a lot of money. Now this bullish fair value gap wants to push price upward, but there is still another obstacle, a bearish daily fair value gap on the way. And the function of this bearish fair value gap is to push price lower. So now let's take a look. Then you would have what, place your trade. If you place your trade here now, and you have to exit before it gets to this what, this bearish fair value gap, because there is going to be power tussle here. There is going to be some obstruction for some time, okay. Now you would have taken out your trade, because you still have to what, you still have to profit from it. So you go to the lower time frame, you take your entry. So before price gets here, you would have been out of the market. So now let's take a look at it. Price has what, eventually, this fair value gap has eventually pushed price into this bearish fair value gap. Can you see? And the moment price got into it, it rejected price. So you have what, made your money already. So you are out of the market. So if we switch to what, to the lower time frame, on 15-minute time frame, how we enter, where we enter, look at it. This is where we enter that what, that trade. Can you see it? This is actually where we enter the trade, and this is where our stop loss is at the low. Now look at how price went, and it hit that what, opposing daily fair value gap. So now the purpose of this daily fair value gap is to now push price away. Now let's take a look at it. If it eventually did, can you see? It eventually pushed price away. So now let's switch back to our what, our daily time frame. Now can you see? Now this is that bullish fair value gap. This is that daily bearish fair value gap. Now after that, price has been ranging between the bearish and what, and bullish, because the high of this bullish is this. So the purpose of this fair value gap is supposed to what, to take out the high, and the low of this bearish is this, and its purpose is to push price lower to take out what, to take out this low. Now that price is ranging, so where is price going to what, break out to? Is it going to break out through this upward, or is it going to break down through this downward? Now don't forget that our initial point of reference is weekly fair value gap, which is the strongest of all of this, right? Now, the energy that this one has is enough to what? To push price towards what? Towards the liquidity point, this swing point. So, as an ICT trader, you should know that this is what we are using. This is the energy we are using to push price up from the beginning before it got to what? It got to a point where there was a seek and destroy. So this weekly fair value gap is still strong enough. So it still what? It still uses its energy to what? To push price upward. So therefore, price will break through this and it for it to what? To continue. But if it eventually, because that is our proposition, that is what price is expected to do. This weekly fair value gap is expected to what? To push price up. You understand? So to this very point. But if it eventually push price down, it simply means that price is going to what? Is going to respect the fair value gap on the monthly time frame. If you check it as at this moment, today is 25th of November, as at this time that I'm making this, you understand? So price has been ranging on gold, so you can check it on your own. Now let's take a look at it. Can you see? Can you see? Price eventually broke out. It broke out of this, okay? Because the strength of this weekly fair value gap is still very strong enough to what? To keep pushing price upward. Okay, now when it broke out, it now formed what? Another. As at this moment, this candle, this black candle is still breathing, but is about to form a new daily fair value gap, because we are on what? We are on daily time frame. Can you see? It's about to form a new daily fair value gap. So now this is this leg that price will now use to escape this seek and destroy condition, this ranging price action. So price will pull back into this daily fair value gap. Then this daily fair value gap should be able to reject price upward, and it will finally get to its destination, because after this leg now, I don't think there's any obstacles on the way aside from this swing point. There is no other fair value gap that has not been mitigated. All the fair value gaps here has been mitigated, so no obstacles on the way. So there is going to be free run, you understand, from here up to this point. Okay, so that is how it works. Now this is what we are actually looking at, that price will eventually do. So if this happens, that this fair value gap is formed and price will push into it, it will what? Reject price and push price upward. Can you see that that is seek and destroy? Most traders, they actually don't know this. They don't know that, okay, seek and destroy conditions and what will happen when price enters seek and destroy, or they don't know when price is going into seek and destroy. They don't know how to trade seek and destroy. So if you've not subscribed to this YouTube channel, endeavor to do that, because the next video will be coming out very soon.